Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to hit up Twitter, look at information from Twitter, see what's going on in the Twitter world. I'm going to obviously give my opinions along the way. If you guys need any help with anything, commodity related at least, check out finding-value.com. We've got that on the website, and we are actually doing a question and answer session right now as you're listening to this. So I'll see you there if you're a member, so don't forget about it. And we'll dive right in, give you my opinions around this. And again, if you want to follow me, it's at finding_finance. So we've got, what about 90 West Texas Intermediate by the end of September? I'll take it, is what he's saying. This is crude oil futures, continuous contract seasonality. We are in February, transitioning into March. And you can see that that usually goes higher from a seasonality standpoint. So not that I'm expecting this to follow and track perfectly, but it's just something for everyone to know about seasonality of crude oil futures. Looking at URNM, supported for higher prices. So what we've got here, this is the rate of change going on down here, MOM. We've got a little trend line that we've broken, done a retest, and that's ready to move on higher. And that's going to correlate with, hopefully, a higher move in URNM. We are squeezing up here into the corner, and I agree with his opinions. And now we just have to be patient and wait. There's a lot of really good setups in uranium right now that I'm tracking. So, yeah, uranium's looking pretty good. Looking at mortgages, and I just thought this was kind of obvious. I don't know, a lot of people post very obvious stuff, but let's go over some obvious stuff. It says more than 40% of all existing home mortgages were created during 2020 and 2021 when the pandemic caused borrowing costs to plummet. Great news for homeowners, but perhaps bad news for the Federal Reserve as it continues to fight to cool the economy. Well, yeah, because rates were low. I mean, I refinanced, and everyone I know refinanced at lower levels in 2020 or 2021. And this is what it looks like. It says most U.S. mortgages are pandemic mortgages. And you can see the big move in 2020, 2021, and even 2022. Of course, people are going to take money and do loans for doing that because you've got cheap rates. So I thought this one was kind of obvious too. It says bullish on uranium. Sprott says we are starting an energy transition materials secular bull market. No way. I never would have guessed that. Between the predicted deficits in raw materials for batteries and energy woos, uranium is likely to rebound. Yeah, we've been saying that for a while. With the energy transition, they're so mineral intensive that people are going to have to adopt uranium. And nuclear, I should say. So here's oil. This is Scott. I haven't had Scott on for a while. He's been busy with work. But perfect grinder on the 200 weekly EMA before potential. He's got some moonshot. I guess you don't want to put that on there, but you can see this guy. It's right here. So when we look at a Livermore cylinder, generally you get these spikes that come up before it back here. You come up, you got one last kind of pullback, and then you rip it. Is it the Livermore cylinder? It sure looks like it to me. Maybe we could rip here at any time. So I definitely like oil where it's at, and hopefully we can break through the $82, I'll say, resistance level that we're going to try to break out of soon. Now here's Peter. He says, can you say recession? This is the most inverted ever. Well, what if it gets even more inverted? What if we go inverted off the page? I don't know. But on a side note, inflation expectation swaps have surged back up near cycle highs, just to let you guys know. And the curve is inverting to very low levels. I don't know if it's the most inverted ever. I know back in the 1970s, I think it was more inverted than what it is today. But at least back in the 1990s, it is the most inverted since then. So here's Lynn Alden. She says, some people want to trade digital pieces of paper based on weekly price charts. Others want to bet on what the world is likely to look like in 5 years. Half of financial Twitter on my timeline consists of these two groups debating with each other. I'm in this camp here. I am not on the weekly price charts trying to basically take profits on a weekly basis. I'm looking 5 years out and trying to figure out what the world's going to look like. And that's how I arrange my outlook paradigm and my investment portfolios around what's going to happen in the next 5 years. If you kind of zoom in here, there was a couple, maybe not. I'm going to go back and get out of that. Just kidding. So here is when GDP peaks, adjusted for producer price index, silver bottoms or breaks out. And he's basically discovering the market conditions. That's really what it is. It says still some way to go before gross domestic product breaks out once again versus inflation. And when you can see that, you can see the three waves here quite distinctly for silver. And you can see how the GDP adjusted for producer price index, how this topped, came back down, and how this really rocketed higher. So it's this sideways motion that we really went up. Sideways motion, we're probably going to go much higher than that. What this is telling us is that the market conditions, when you get the producer price index to outperform GDP and basically move sideways, that is the conditions that light up precious metals in general and commodities. So yeah, we are in that sweet spot for that to happen. Here is the U.S. Industrials Metals Index moved very strongly after I called the bull market start and blue false breakout back in April of 2020. Said 2.5 years ago, we're in for big inflation. And I think the second inflationary wave is incoming, bullish chart. And this is the U.S. GSCI, Goldman Sachs Commodity Index, Industrial Metals Index. Usually you get a three-wave consolidation, you get a breakout, you get a retest, and then you get a move on higher. And I think that's coming any second, or we're in the middle of that big move. So it looks good to take off. You can also see on the stochastics here that this is also pointing higher, which sometimes tells us that we could move up. I really don't use the RSI or the stochastics. I just look at the plain chart. I buy the breakout or even before the breakout, depending on what looks, maybe even the false breakout down here, depending on the ratio. And then I just hold on, buy the back test, and then hold on again. It says this ratio chart shows how extremely undervalued small and mid-sized Canadian commodity companies are versus general U.S. equities. The CRB went 220% in its baby bull move. During the next phase, this chart will start to move. This commodities bull will be end of the rainbow stuff. And the reason it's going to be that, and one thing I want to ensure that everyone understands here, on the website, I've showed bottoming patterns. This is that one bottoming pattern that we talked about. You get this big move lower, it consolidates into a falling wedge, it breaks out, comes back for a double bottom, and then rips it. We've seen these types of scenarios happen. Sometimes they even put in a Jesse Livermore accumulation cylinder right on the side here. Or it develops it above this line here, where we get an accumulation cylinder next. I know that this is a ratio chart, and sometimes they don't develop on ratio charts, but we're going to see a vast outperformance of some of these assets that we're in, just massively outperform here coming up soon. So patience is required, and getting those highly leveraged companies is what is important. There's two aspects to making a lot of money in the markets. One is identifying the correct sectors at the right time. That's one of the key components. The second one that is very key is how do you play it? What's the best way to make money from it? Because you can get the timing right and the sector right, but blow it on the vehicles to choose from. Or you can absolutely rip it if you get the right vehicles with the right timing and the right sectors. And that's what we look at on the website there is what companies could potentially do very well. Here's Liz. She says the S&P 500 through today's close with the downtrend line, and we've broken out and did a retest, and we're starting to move higher. I talk about this on the daily updates all the time for the YouTube channel. Here is an interesting, very long-term chart for the belly of the beast, Goldman. Goldman Sachs is also one of the few investment banks that still has physical commodities trading desk. And you can see this could be a false breakout where we come up, break out, and then we pull back down because we've got a very weak MACD. Goldman Sachs as a company, you got to keep in mind, is also sensitive to interest rates and all that other stuff. You can see the RSI is also pulling on lower. So it could be a false breakout. Now here's Cornerstone Analytics. He says, what do our green power developments rely on? A manufacturing supply chain that begins at Chinese factories powered by coal. Are you starting to understand the great green fraud? So China's building 6 times more coal-fired power plants than the rest of the world combined. Last year, it permitted the equivalent of 2 new coal plants per week. China quadrupled the amount of new coal power approvals in 2022 compared to 2021. So it's all powered by coal over there. And what we do, we'll say more first world countries or societies, is we just move all our manufacturing over to China and say, oh, look, we're emitting less, and move all the manufacturing and dirty stuff over there while they emit more. We've got an impressive 5-year topping structure morphing in existence for the NASDAQ priced in silver. So this is a ratio NASDAQ to silver, and you can see these big red candlesticks. Those are selling distribution candlesticks, which will eventually work its way lower. So yeah, I agree with them. It's going to break down. Silver's going to outperform the NASDAQ at some point in the future, and it looks very good for that outperformance to happen sometime over the next few years. Now here's Boyle. Boyle is up 70%. One thing I wanted to talk about Boyle is this is a trading vehicle. This is something that you do not want to buy and hold on to. The leveraged ETNs, ETFs, or whatever you want to call it, they naturally decay to zero. So they're not very good to hold onto from a long-term perspective. Just wanted to kind of let everybody know that. Yep, coming out about that. It says Goldman Sachs, 99% of borrowers have mortgage rates lower than the current market rate. And this is where the majority of people have their mortgage rates. Just an FYI on that as well. Suncor starting to break out. This is from yesterday, March 2nd. That's breaking out, and we could see a big move in oil. Now, it doesn't mean that we'll move straight up. Obviously, we can have pullbacks along the way. Natural gas has been ripping it kind of hard, and we're going to see pullbacks. So get ready. You know, you shouldn't be chasing prices. You should be chasing price charts and the dead period. That's what I'll say. And that's what I've got for today, guys. So that's where I'm going to end it. And again, if you need any help, check out the website. And that's what I'm doing right now, is I'm actually doing the Platinum question and answer session and answering questions right at this time. But that's all I've got for today. Hopefully you guys enjoyed it. Give me a thumbs up. Subscribe to the channel if you haven't already. And we'll catch you next time. This is Finding Value.